Hello, everyone. Happy Tuesday. How's everyone doing? Good morning, John. Good morning, Sterling. Thank you for putting in the earnings and the news. Hello, Mark. Let's see. Good morning, Patrick. What's the temperature in Minnesota today? How chilly is it? It was chilly this morning. It was 47 here on the dog walk. What else do we have here? Sterling putting in again all the news. Thank you for that. Again, there's not much going on. We have the Ukraine peace talks and Russia talks with U.S., but nothing coming out of that yet. Good morning, Royal Palms. So, I think the Trump coin has become the new crypto direction lender short term, at least. Oh boy, we're not going to comment on the Trump coin. Good morning, Eric. What else? Good morning, Daniel. Good morning, David. Again, thank you for tuning in, everybody. We'll wait for some more people to come in as we get through. This, again, is a very quiet week. Cycles that look like they're resetting to up and up, at least in the short term again. Would not be a market that I would be looking to short without a pattern, that triggered pattern. So, and I'm talking for the stock and the stock futures markets. Yesterday, again, was a holiday. I had some Fed speak yesterday, but the market's shrugging off literally everything. Nothing's sticking to this market. Thank you. Duo, nice like, everybody. Hello, Charles. Nothing's sticking to this market. So again, I would not be shorting this market at all right now. Now, that does not mean I'm super bullish. I'm maybe 0.5 to 1 on a scale of 3, as Jim Iorio asked me. It might be up to about a 1 now, but that's minorly bullish in my book. Today we got some Empire State Manufacturing Index, which came out a bounce from prior, mainly due to inflation expectations. We have Barr speaking, we have Daly speaking, but this is a quiet day. Tomorrow we have mortgage stuff, Red Book, housing starts. Remember, things are delayed a day this week due to the holiday. We have the FOMC minutes, which are not delayed. They normally come out on Wednesday. Thursday, we have jobless claims, Philly Fed. The EIA numbers are out on Thursday this week. And Friday, sort of the most interesting day of the bunch with the S&P Global Composite, and the Michigan Consumer Sentiment and inflation expectations. For some reason, I cannot say inflation today. But so that's what I'm saying. It's overall a quiet week, unless something comes out of nowhere, which is always the case with Trump being in charge, with Trump being the president. We could always see something come out of left field, but there's nothing major on the radar screen. Most things green. Little pullback in healthcare right now, but most things green. It's turning into a buy everything Tuesday. All your groups, except consumer defensives has pulled back just barely, but everything else besides that, led by technology, basic materials, and consumer cyclical, all marching higher. Now, this is, again, the market's getting more and more complacent, now expecting the first cut in July. So that's pulling back, and then just still one cut this year, but coming forward into July. Fear and greed, are we really still in that? Are we going to break out to all-time highs still in fear mode? I'm just looking. This breath is deteriorating a bit again. Again, this market is very, very complacent. It's going to take something from left field to come out. 38.54 Schiller PE. Let's see, what else are we looking at? Good morning, Anissa. Hey, Heinrich, I saw your comment. Still thinking about the course. That's why I'm teaching more and more stuff. I'm teaching more and more stuff. If you tune in, you can ask questions about the rules. I am teaching more and more in case I don't do a course. It's not just building the course. That's fine. It's also hosting the course. And then if there's enough people that want to buy the course to cover even the hosting costs, that's the problem, because I don't want to lose money on anything. Losing money is like losing money. On a trade, it's one thing because you have reward to risk. But again, it takes many weeks to put something together. That's why I'm teaching more. If you have a minute, I was wondering what you do with a stock when it reaches your short-term target, but you also have longer-term targets. I at least raise a stop. Okay? I at least raise a stop. And depending on where my short-term target is, I can always take something off the table. And if I have longer-term targets, it could be just a very little, could be locking in something and getting the trade to even break even. So therefore, there's no risk. Gold's in a long-term bull market, Coco. That's why I would not short gold at this point. And even on these, like we had a potential double top that might be invalidated this week and never triggered. Again, and I said I'd only use that for pullbacks in the short term. We could see another push higher easily still in gold. Credit card debt just hit a record 1.2 trillion. There we go. And people are leveraged to the absolute hilt. And everything's going to be hunky-dory. Now, in terms of earnings, yesterday there wasn't much. This week is, you got a number of companies reporting, but not a lot of market-moving stuff. Probably the biggest market-moving thing is Walmart on, hold on a second. I just have to adjust one of the arms on my chair. Walmart on Thursday morning. You also have Alibaba Thursday morning. But interesting to see how Toll Brothers prints today. But again, nothing is going to be potentially market moving unless Walmart comes out with some shock with their earnings. So that is the biggest thing. That's the biggest thing that I'm looking at this week. All right. So let me show you also what I'm looking at. Weekly cycles. They were starting to turn down over here. You can see this and now turning back up. So we got some upward pressure still holding the weekly rotation zone. And now this double still qualifies, but in the short term, it's technically a triple. Technically a triple. So those odds are shifting slightly favorable for our breakout play. And since nothing is causing this market to really react, we're getting an upward build in pressure. I'm watching for the breakout play. You're still targets. If we come to above all-time highs, these December highs in the futures, your next targets are 62.31, 62.78 in the short term. The only thing that would have me sit up and take notice at that point, if we start getting below on a closing basis, this is a closing basis around 60.17. That's the only thing. Other than that, you can see the rising rotation zone. We've had a minor breakout. We had the breakout on Thursday, pausing on Friday, and now looking to take out the highs from the third week in January. Coming into a very key area. Now, there are some stopping points in here. The next little key area I'd be focusing on is, let me raise this, is for the short term about 61.70. Above there, you have some topping tails, but that could give it the all clear to take out to this 6,200 area. Key support now. The major support is I'm watching 6,100 to 6,106. Minor support, I'm keeping an eye on 6,135 to 6,140. So those are the key things. You're very welcome, Eric. So that is what I am watching. That is what I am watching right now. So I'm in minorly bullish mode because, again, nothing is causing this. If you look at the 4 hour, nothing's causing this market to really react. Even the Fed saying we might have to pause, Fed speakers might have to pause longer. We had to talk, I forgot who it was yesterday who said inflation might not get back to that 2% level for a couple of years. All right. So, but again, market's still shrugging off everything. The minor level I'd be looking at going into the open as long as it holds 61.43. Grinding higher at this point. So, what's this? Worst Fed pivot ever. Since the Fed pivoted, CPI has risen to 7-month high and PPI just hit highs since Feb 2023. In fact, rates paid by Americans are up 100 basis points since cut began. Again, I don't know why they went 50. They could have cut something. But again, the market just wants to keep climbing. And the Fed should not be looking at the market. I don't think they want to disrupt the stock market also, but we need a pullback in the stock market. You can't, I think they're mixing up the economy for this stock market, which they've done since Greenspan. By the way, NASDAQ, the weekly, this pulled back far enough. The weekly double is off the table in the NASDAQ. The NASDAQ also, weekly signals reverting higher. The NASDAQ, the major support levels all the way back at 22,050. It's just plowing through everything. We had the minor harmonic area, which we got a little pause in. So this, we had a little potential here, a little potential double that is now off the table, paused right there at that 25% harmonic. So the minor support going into the open is back at 2275. But if you look here, it's into clear path. We still have clear path up to 22,365 and then 22,420. All right. So that's what I'm watching for. And if this breaks out, we have another target cluster up here. We could see a little pause. But if this breaks out higher, next target is 22,670. Good morning, Andrea. You actually have a pretty broad recovery since 2022, Coco. And stocks do need a pullback. You have a Schiller PE running 38. This earnings aren't expanding that much. But the signal flows are still positive, and it will still keep grinding higher until it doesn't. Again, the potential double in the NASDAQ is off the table. Any bearish patterns that are setting up aren't triggering. So, would I be short in this market? No. Dow, if this starts taking out Friday's highs, it'll take the potential double off the table, and that's just a minor potential double. The weekly double for the Dow is still in play, but we shall see. Nothing else has triggered there. I'm keeping an eye on Friday's high and low in the Dow. If we break below Friday's low, though, there's pretty key support rate about 44,440. If we break above Friday's high, it's to tackle this 45,100 area. The Russell still has a potential double bottom in play. This spike down last Wednesday did not invalidate it. I'm paying attention to Friday's high and low. We start breaking above Friday's high this week. I'm watching for a retest, especially of the 22,325 area. You got a lot of alerts going off, Sterling. Small caps did not recover. They covered from the 22s. I'm looking at the Russell right now. Here's your 22s. Here was your sell-off. They've recovered. They have not taken out their all-time highs. And it's not a massive recovery, but it's still a recovery. VIX, slight bump up today, but nothing. Anything down here in the 15s. The 15s are the new 12s. The 15s are the new 12s. Now, we start getting below this 15 level with some rapidly declining momentum in the VIX. Then I will again, really be focused on that breakout higher. The DAX just keeps marching. Now, the DAX needs a pause, but there's no topping sign. There's no topping bar. Very, very overbought, very overextended from the weekly rotation zone. You know, when you start getting this overextended, you start watching for the topping signs, but there's nothing yet. There is nothing yet. Trading against this little harmonic cluster. Next minor, I don't even have good pausing bars because this thing keeps just marching, but the next minor target is about 23,100. Notes. The notes, we've rallied back up and start to kiss the trend line goodbye. So I'm paying attention to Friday's high and low in the note futures. And in terms of the yield, we pulled back, kissed the trend line goodbye potentially. That's why if we take out Friday's low in terms of yield, I'll be watching for a retest of the beginning of February low yields and possibly a breakdown there. If we take out Friday's high, then it would be a confirmed kiss of trend line goodbye, and I'm watching for a return to the area of the 62.5. If we close above that 62.5, then I'll watch for the notes to resume the yields to climb. Dollar index. This is looking like a corrective channeling pattern. We talked about it with Daniel last week. I'd be waiting for better reward to risk to even short this thing with this double. Especially if it bounces back to 106 to try to get much better reward to risk, because this could be turning into a channeling double. You see it did not close below the weekly rotation zone on Friday. Still holding the weekly rotation zone. So that's why I'm a bit cautious on this, and it's really forming a nice channel. Now, this on a bounce where better reward to risk could be still an interesting play. However, I definitely want proper reward to risk on that potential setup. Crude, we still have a potential double bottom against very, very key support. However, if this breaks, if this 70-50 area breaks on a closing basis, I'm watching for a quick trip down. The only thing that really gets me bullish in the short term is if we trigger this double. Not much to talk about with natty gas. Gold, after the big sell-off on Friday, bouncing back up. Is this potential double triggered yet? No. It didn't trigger, and is it invalidated yet? No. If we take out 29.48, it will be off the table. It will have never triggered. Again, we're overextended in gold, and I will completely agree with Coco, but there's a lot of pressure to the upside in gold, and we could easily burn off this overbought area by moving sideways for a bit. Daily cycles are dropping, and this is really just a sideways correction unless the double top triggers. Would not be shorting gold. Even if this did trigger, I would not be shorting it because it's against the daily and weekly rotation zone. I'd be looking for the pullback levels to establish positions. What else? Silver was very interesting on Friday. We had the big spike up and then collapsing back down and closing below the key resistance still. Now trying to take it out again today. If this manages to close now, Friday could not close above it, but we have daily cycles at the top. This really needs to sustain. There's still a lot of selling pressure in silver. Could not sustain the move on Friday. Yen is a potential double bottom, but still technically the magnet price is lower. So the only thing that gets me bullish in the yen, which would be a weaker yen in the short term, is if this double were to trigger. Euro, we still do have the potential double bottom in play, but not confirmed or triggered. So this could just turn into a sideways chop still. Spiders, your key level 613.29, looking to open at 611.86. Your major support is back at 609.75 to 610. I'm watching for that 613.29 and then the 617.50 level potentially. Now longer term, we could be setting up for another very key divergence, but again, this potential double in the spiders is still in play. Could be invalidated this week, but it is still in play, a long way off from triggering. The Qs coming out above here. We now have, let me fix this level. This one's, I don't have anchored correctly. There we go. We take out the highs 539.63. We're looking to open above those at 540.87. So the next target is 544, then 549. Your support is at the all-time highs, 539.63 area, and then your major support is back at 533. Wants to just keep grinding higher. Bitcoin, not much to talk about, still in a consolidation. Again, my levels haven't changed. 98.150 for the potential breakout, 94.700 for the potential breakdown. What else? What else? We have Tesla. Again, we had the little percent B buy into the rotation zone, but I'm going to be watching for a rollover play closer to the top of the rotation zone and the key resistance area around 380. NVIDIA, we did have a minor potential double, but that got invalidated on Friday and holding the key support. So I'm now watching for this to retest. We still have a gap around the 75% harmonic. I'm looking for this to close the gap, 142.62. and then potentially regain the 87.5 at 148.12. So things that were breaking down have regained key support. That's why, again, unless we have something to really shake up this market, stuff is holding firm. Meta, which I've not updated in a few days, but Meta just keeps grinding higher. Now, look at this. A very extended from the rotation zone, very overbought, but there's no topping sign. It just keeps getting bought up. Just keeps getting bought up. So, what are you going to do? You trail? Other than that, there is no major key short pattern just yet. So would I be looking to short this? No, but I'd be watching as this approaches the 750 area cluster. Again, you got a lot of stuff that is just climbing. Even though Apple, we talked about their results weren't that great. Their iPhone sales are slowing down. Now starting to climb again. Back up, could be back above the 62.5. I don't remember if this closed, but no, it did not on Friday. But I'll be watching. If we close above 244 now, am I super bullish on Apple? No. But from a technical standpoint, there's gaps left behind. If this can manage to close above this, just remember 245, we could see Apple grind higher again into potential double top territory. So, would not be aggressively shorting this market at all. It would take something coming out of nowhere for me to really look for the short side. With that, that's where we stand for now. That's a pretty good synopsis. Remember, very quiet trading week. Also, when we have a quiet trading week, it favors just a grind to the upside. Because no news is good news for the market, because it's even been shrugging off bad news. So if there's no news, there's nothing for it to even try to shrug off. So that's where we sit overall. Hope everyone has a wonderful shortened trading week, and I will talk to everyone tomorrow. Bye for now.